Hey everybody, Brett Garner here with Rachel Farrell of the J. Harmon Home Team, and we are talking about affordability when it comes to housing today. And I know that has been a way of you building your business, is teaching people how to live beyond just, the mortgage, not living to pay for that mortgage.
Yeah.
So let's unpack a little bit about what the affordability equation is right now.
Absolutely. So whenever you talk to your lender, typically they're going to ask you questions like, what are you comfortable with from month to month paying on your house? And whenever I say that my mission is to help people live outside of their mortgage, what I'm saying is that your mortgage line item and your budget should not cripple you from being able to do anything else in your life that you want to do. If you like to buy clothes, if you like to go camping, if you like to eat ice cream every Friday night, I don't want your house to keep you from doing those things. So when you're talking to a lender, you want to make sure you're talking to somebody who is also passionate about affordability. And whenever you're asking those questions, show them, tell them, this is where I want to be. I want to be able to do these things in my life. What should I do to get there?
Well, so let's talk about what actually affects that affordability. You got the two big things: how much you're paying for the house.
Absolutely.
And what's your interest rate.
Absolutely.
So in a hot market, prices are rising,
and
the interest rates have been pretty low.
Really historically low.
So what's going to get people off the fence that are saying, hey, I'm going to wait till things are more affordable?
Absolutely.
That it's kind of an oxymoron when they say that, because right now we're seeing the most affordable housing rates ever.
Right, absolutely. So moving forward, if the market were to cool down like people are wanting, like the buyer is suggesting, I'm going to wait until the market cools down. I'm going to wait until prices either sustain or drop a little bit. When that happens, likely what we're going to see is an increase in interest rates. When your interest rate increases, you are adding dollars to your monthly payment. So for instance, if you're looking at let's do $300,000. If you're looking at a $300,000 house, right now interest rates, we're going to say 2.75. That's $1,225.
And that's a 30-year mortgage.
Per month, 30-year mortgage. 2.75% interest rate, $300,000. Say our market cools a little bit, right? Our house price now is $292,500, and our interest rate has risen just
Let's see. Yeah,
2.5%.
Yep.
Just right here. All right, so at 3% for a cooled off house at $292,500, your monthly payment is now $1,233, an $8 increase.
So let's also think like, all right, if there's a catastrophic economic downturn, or the Fed starts to raise those rates, let's take that $300,000 house and look at what a cooler market interest rate would be, which we're going to say is 4 or 4.5%.
Yeah.
So on your chart, where does that put us at 4%? That monthly payment's now $1,432 a month. We're talking a $200 a month difference. So if you are waiting for the market to cool, you might be paying more overall for that house at the same price point, but you're also hoping for that price point to drop for the same house. Now, whether or not that happens every time, we can't predict that.
Right.
So right now might be a good time for you to go ahead and make that phone call to us and ask if the time's right. Because it's always right when it's good for you,
right,
but we can help you make those decisions and talk to the right lender to make it all work.
Absolutely. And looking at it holistically is important. Of course, your monthly payment includes the price of the home, interest rate, your insurance, and your what's the fourth one? Oh, your taxes. Got to pay the government. Anyway, it includes all four of those things. So whenever you're looking at purchasing your home, again, you have to look at that number holistically. A lot of people will look at that price and say, oh, $175,000 house, I have won the lottery. When in reality, you might be paying a lot in taxes. You're, paying a higher interest rate or a lower interest rate, whatever that is. We want the best for you. And if you're looking for affordable housing, then talk to us. We'll look at your financial picture. We'll look at the holistic view of what purchasing a home looks like and try and make the best decision for you and your family.
Thanks, everybody. We hope you enjoyed the information. And if you got questions, reach out to us. We would love to meet and discuss.
Have a good Wednesday.